We'll do it live.
Okay. No.
We'll do it live. F it. Do it live. I'll write it and we'll do it live. F***ing thing sucks.
Yeah.
Welcome back to the Capital Mindset Show, everyone. Hope you guys are having a great day out there, as I am. Because I am pretty excited for Monday, and I'm finally going to be done. All the work that was put into at least this part of the program is going to be done. And yeah, and then we're on to like the next phase. So it's still not ending, but it's fun. It's fun. All right, so we're not doing a 9-hour stream. I already see your comment. Let me see if this is working because okay, so it is working. All right, so Dom G's asking, are we doing 6, 7, 8, 9 hours? No. The plan is we're going to see where this goes. We're going to see if you guys have any questions. We're just hanging out here. I'll talk about some things that are kind of going on right now as far as, maybe some investments I'm interested in. In all reality, today I didn't even get a chance to look at the market. I had meetings in the morning and then followed up by, this mock exam thing for the CPA FAR. I can't believe it. It's been 3 weeks of studying for this thing. Never do that in 3 weeks, by the way. I would actually say that the most optimal amount of time an individual should take for studying for the CPA exams, at least FAR, is probably 2 to 3 months. Okay, and I think you should be fine. I think 3 weeks is really short. I think the mental drain it's had on me is it is definitely felt. I'll say that. But yeah, that's where I'll leave that. Okay, so we'll see where this goes, because I always say that, but you guys sometimes understand how I get really caught up in the moment, and before I know it, we're sitting at 2, 3 hours, 4 hours, 5 hours, something crazy. So you guys even notice that when we just have a Discord call. Sometimes I'll just be talking, and I just love talking to you guys. So then it just keeps going and going and going, and then before I know it, Mick Buddha T has fallen asleep, and then he's woken up again in Europe. So it's like that's how you know it gets to an extraordinary level. So yeah, as far as that kind of stuff goes, I know that you guys saw the Unum video come out today. Like I told you guys I think it was 2 live streams ago, or the last live stream ago. That was a video I recorded last week. I haven't had time. I tried recording some videos last night after I was done with everything. And I kid you not, I watched some of the recording, and I was so mentally drained. I didn't realize I was shaking the table. So throughout like half of the video, just the camera's just shaking. I just looked devoid of life. So I was like, all right, I'll just wait till I have more energy to actually do those videos. So I had some planned. I think it was like a 30. It sucks because I basically just went off on like a 37-minute video talking about a bunch of stocks that you guys were requesting. But I'll do that in a better quality, because it was not pleasant to look at. I can tell you that. It was just too much shaking. Anyways, so let's see here. Meetings in the morning at a dumpster at Quick Trip. Yeah, that's definitely where the meetings are happening. No, that's actually, I pretty much stay in this room for the most part all day. So this is my personal desk that you guys are on. And then I have my work desk right here to my left. So I'm pretty much surrounded by screens, because there's the screens that are in front of me. You guys don't see these, but they're the screens that are in front of me. It's all for day trading, because the more screens you have, the more profit. And then I have the other screens here on the left. So I have 2 screens right here on my left-hand side. So anyways, let's see here. Meeting in the mornings. Okay, so do you want us to cut off you at a certain point? No, you don't have to cut me off. I'll try to be let's see if I can have the restraint. And if I don't have the restraint today, then next time I'm going to definitely make you guys cut me off. So let's see. This is a test for myself. This is a test if I can do it. Okay, so to roo or to not roo is the question. I suck at that sound effect. I literally just go roo. It's not that good. It's not ideal. But yeah, so you guys saw the Unum video. If you didn't see the Unum video, I'll kind of walk you through some of the strategies I'm implementing as far as exiting that position. So let me see where I have it, because I showed it to you guys in the Discord the other day, and it got lost in it. Or I didn't want to go back to the brokerage account and take another photo, but because I already had it and I already labeled it. I don't know what happens, but I have Windows 11, and there's something that occurred where I had everything organized, and then it just shoved everything into one of the screens. I have no idea why. So I have to reorganize everything. It's my fault for not just putting them into folders. I'm going to put them in the folders next time, so if that ever happens again, it's probably something I did, by the way. It's not something fault of Windows. So I'll kind of go over my Unum thoughts, and I could be wrong. This could be the wrong let's say optimization movement for Unum. There are probably some of you that are saying, well, you could do this. That's a bit better. That's all fair. So yeah, the point is Unum's been in the portfolio for quite some time now. And just like how ConocoPhillips, I made videos discussing my thought process, because that's basically what these videos are for, that I'm saying, okay, I'm selling this position. And you see how long it actually took me to finally exit that position. So I don't just say, oh, I'm selling a position, I'm out. A lot of times I like to scale out of it. And so with Unum, I'm doing something that's not unique at all, but I think it's an interesting way to exit. So what I did was I sold some contracts on Unum, not on the full position, but on you could say a decently sized position of Unum. So I showed this in the Discord the other day, and you guys, I think it was on Monday, because I did this trade this week, and the Unum video was filmed last week. So there's about a video or a week separation between those two. So that video I filmed last week was just the intention, and then this week was the action. I was going to film a separate video, but I'll talk about it here on the live, and then you guys let me know if you want me to do a separate video just talking about more, maybe, I don't know. Let's see how in-depth we go with the thought process on the option. So here I got the photo pulled up. And so this is, let me just go desktop. Yeah, right here. All right, so I'm playing around with where I'm going to put myself. I'm going to put myself right here in the middle for now, because I know my symbols here on the right hand. So this is Unum. You can see the date that it was done on the 8th at 11:22. And you guys probably, if you were active in the chat around that time, I shared it with you guys. And so what my thought process here is, I did it for an expiration of December. Okay, so December is when it expires. And what's going to happen is I have to hold, and you guys can see the details in the bottom right there. You see that it says UNM December 16, 2022, 35 call. So the strike price is at $35, and the expiration date is on December 16th. So I was able to kind of eke out of that about a 20% annualized rate of return, 10% an actual rate of return. So 20% annualized, because throughout from here till then, well, it's actually more than that, because I'm kind of rounding. I'm kind of oversimplifying. But let's say we had 6 months till December. If you annualize that rate of return on those shares that I sold the contracts on, it would be greater than 20%, because we did it in August, technically at the beginning of August, but whatever. And so that's kind of just eking out a little bit more cash flow out now at a strike price that I would actually be willing to sell it at. So it's a win-win scenario for me. The part where I would lose, and it's why I entirely haven't done it on the full position yet, is because the opportunity cost, let's say if it were to rise $40 a share. I don't know if that's going to happen, and I'm going to be evaluating that possibility, whether or not that will occur or not occur. And maybe I just exit the rest of the position and I just hold on to these shares for the duration of this contract. Maybe I close out the contract and then just sell it. It really does depend. I don't know. But what I'm also going to be doing is collecting that dividend that they're going to be paying me out, and at the same time, I profited decently from this. So in a way, my dividend, if you want to think about it that way, from Unum is going to be it's going to be pretty big. My yield on cost on the shares are pretty strong, if you look at my cost basis. So I'd say that these are typically one of my favorite ways to exit a stock. So if I have no qualms about exiting a position, I'll typically do this. I'll sell some call options on it. So yeah, that's basically some of the thought process. I did the same thing with AGRD. I shared that with you guys too. So AGRD, I've done that actually several times on both Unum and AGRD this year. But with options, I'm pretty opportunistic about it. I don't look always to do it. I actually even might do it on Cardinal Health. I don't know at this point, because Cardinal Health's been having like a the three companies, ABC, McKesson, and Cardinal Health, have all been having their own little silent rally, kind of probably having to do something with the liability of opioid, let's call it lawsuits are behind them a bit. So moving forward, the market's kind of repricing them. And yeah, they were really good value at the end of 2021. There's some of the stocks that I point to that did really well, while the market's been doing not so well. So they've actually really outperformed the market. There are some stocks that have also outperformed from like Bristol Myers Squibb, which was another one that one is the one I actually sold. And you guys can check out the video where I discussed that back in 2021. And in that was when I still had my co-host Austin on the show. And we were talking about he was going to continue to hold on to it. I was letting go of it, but I let go of it knowing it is a good company and it has done well. I was just buying other things at the time. One of them actually being Canoo Health, by the way. All right, so we can also take a look at some other stocks. I'm going to actually kind of walk you through some stocks I'm really interested in, and maybe also kind of cover some strategies that might be of interest to the average Joe. Okay, so what I mean by that, and I can also talk about some interesting developments. So I'm actually getting my vehicle this month, the end of this month, so I will do a video, let's say, on it. I'm turning in 2 vehicles for this one. And so I'm basically going to have practically, not practically, literally no payments. So it's pretty good on that. And then responsibly so that's not going to harm me when I actually go to leverage up on a mortgage and take it out to get a house. So the final decision on the house is yet to be seen, because I've told you guys at the beginning of this year, well, not the beginning, whenever the Wells Fargo, the first Wells Fargo report video, because they just reported recently, but the one before that one, I told you guys that I would be looking to buy some real estate, and looks like it's kind of happening, what we talked about, at least in my market. I don't know about your market. I can't speak for your market, but at least in my market, there's a lot more availability. There's a lot more desperation you can tell from a lot of the builders. So it really is interesting. So let's see here. A Ford Fiesta. No, it's not a Ford Fiesta. But while actually that would be, I have nothing against the Ford Fiesta. So I'm trading in my gas car and my current car, and I'm going to be getting the car soon, and I'll do a video on that. But anyways, and then of course when I do like the move in, because I definitely will be buying this house at some point. I just don't know which one. There's a couple that I'm indecision about. The reality, what it comes down to, is the question of how much leverage do I want to use. And then if I want to actually be very ultra conservative and focus more on saving and investing rather than having a down payment on, let's say, a very expensive home. So I think that, if depends on what I prioritize at the present moment. I don't have kids, so I got to consider that. And then if I save more now, that will probably help me. My 5-year from now self is going to be like, yeah, good job for doing that. So, yeah, Noam, yes, I am doing this, Noam. I know you think I'm probably crazy for doing this. Noam is, everyone, rounds of applause, silent rounds of applause, because you guys are all at home, but round of applause for Noam as well, because he's been a champ through this program as well. He's a good friend of mine, and we're pushing through this. We're pushing through this. We only have 1 more month to go. So, yes, let's see through some of these questions, if there are any. So I'm up to 7 screens. So, bruh, you're up to 7 screens. So you must understand how profitable a trade as long as you have more screens. Bought my first house at 26. This is a way. Okay, so this is actually, I'll start with this. So I think that if you're looking for, okay, so I think everyone's situation is different, but if you don't own a house at the present moment in time, I think that should be a goal that you strive for, because real estate has a lot of optionality. Now, you could opt for rent. So rent is where you're looking at home or housing as a needs-based, right? But with rent, you're not gaining any equity with each payment. With mortgage or with a house, you're gaining equity in something. At the end of the day, there are additional tools that you can use once you basically own a bunch more of the property, such as various loans you can take out, and some of the loans that not some of the loans, a lot of the loans focusing on real estate. I had this conversation with Cole this morning because he was asking me questions about this very topic, which was funny. But with Cole, or not with coal, with housing, you can take out a lot of fixed rate loans. And so when you take out loans on stocks, right, what do those loans entail? Well, typically they're variable interest, right? So the interest rates can fluctuate. There are some mortgages that are like that too, by the way. You probably know variable interest rate mortgages, interest only mortgages, stuff like that. But focusing just on the traditional 30-year or 15-year fixed rate mortgages, you compare that to something like margin loans or margin debt, and the differences are huge, right? Because in the housing loan, right, you have that interest rate and that's it, and your payments are pretty much fixed regardless of what happens. So as long as your income can support those payments, and for me, you can make your own numbers, but for me, I think a good number that I'm keeping it at is at 20% of household gross income and below. And I think that that's where a household can be really comfortable and then still have plenty of money to invest, plenty of money to save, plenty of money for leisure activities. So you still enjoy things. I think that, what the real estate industry kind of pushes for is, I believe it's somewhere around 40-ish% or somewhere around there of gross. And I think Dave Ramsey has a conservative one of, I think, 25% of net. So when I say net and gross is before taxes, net is after taxes. I know, boring stuff there, but that's a little bit tidbits about that. So, one more thing. Also, if you didn't know this, if you guys who are already buying homes for a while, you already know this, and you're gonna be like, oh, well, duh. Don't buy or take a loan out like a car loan while simultaneously trying to get out a house loan. Your MLO will kill you for that. Not literally, but they'll be upset. So someone's asking a question saying, speak to me a little bit about Meta. What are your thoughts on the call if you were listening to it on earnings? So with Meta, I'm feeling like right now, they took on some debt, by the way, if you guys want to talk about that. So let me pull that up because I got to find that now so you guys can see it with me because I know you guys are also visual learners. Meta's been going through like a sneak up. They're up to $177 too. It's insane. All the stocks are just going up, and this is the boring time to be buying. I hate buying when things are going up like this because I liked it when GPN was at good prices and I was accumulating. Meta's still kind of good. Netflix just got away from me. Now the question for me is actually Warner Brothers Discovery, which I did film a video, by the way, on Warner Brothers Discovery. It hasn't been released yet. So Meta issues some debt. I want to find their debt issuance. And I think they're using it to buy back shares. I don't know what it is that they're using it for, but there was some discussion going around in the Discord section. Let me actually make sure that doesn't. Okay, cool. I didn't want to blast you guys with anything, but they borrowed about $10 billion, and apparently it's their first ever bond offering. And it's actually using it for buybacks. So I think some of the terms of the deal was 40 years out or 30 years out. I forget the details. So let me find it, because I think it's 40 years out. And one of the justifications, yes, it is. Okay, so it's a 40-year security at 1.65% above Treasury. Okay, so what are we getting from here? What is management probably thinking? Well, management's looking at their shares right now, and they're looking at their cash pile that they have on hand, which let's might as well we pull up, all right? I don't think I spoke English there, but whatever. All right, so Meta SEC filings or investor relations. Let's go to the investor relations. And let's pull that up, and I'll pull that up for you guys to see. Okay, so let's go here. Latest. I want all files. Give me all of them because I want to see the latest stuff. Okay, let's go to. No, I want your. Let me see this. 10K, February 3rd. No, I want the quarterly. So give me the newest one, July 28, and PDF. Give it to me. All right, and then we'll share here with you guys. Okay, so I'll move myself around. So I'm going to go to the top today, right there. All right, so here we are. Let's go to the financial statements, and I'm going to make a point here. So this is going to be the most up-to-date balance sheet. We're going to stick to the balance sheet here. So let's go to the balance sheets. Okay, so this is the consolidated balance sheets, or condensed consolidated balance sheets. And we see that cash and cash equivalents for the business is sitting at around $12.6 billion. It is actually down from last year at $16.6 billion. Marketable securities, so this is bonds and stuff like that. And remember, okay, so the new joke when we see accounts receivables is we say, Give me my money, Brian. Okay, so referencing, of course, Family Guy and not Financial Education Jeremy. Just referencing Family Guy, there is no connection between that. So accounts receivable is sitting at $11.5 billion. If only people would pay the bills, then Facebook would be okay. In all seriousness, sticking to the $12.6 billion cash pile, I think that Facebook, based off of the cash flows from operations that they bring in, as well as the cash that they have on hand, which again, we have to consider the marketable securities as basically cash, unless you think that there's going to be some crazy event of delinquency there. But that should be fine. What they're basically analyzing is yields are so low for them at the present moment in time, and the yields on their shares are much higher than the yields or the cost to borrow. So why not just borrow this money and then just buy back shares? That's one thing they're thinking about. A company that's actually done similar thing was Dropbox, right? So we'll see how Dropbox handles that or how that pans out for Dropbox. But companies or management teams, they kind of do that analysis because remember, at the end of the day, you have that cost to borrow versus, let's say, if the cost of a share, if we say the earnings yield, right? The earnings yield versus the yield on interest of the bond. If the difference is big enough or management thinks it's big enough, they're going to probably take that bet because if that pans out, they basically are going to, that's going to benefit shareholders. $10 billion is not going to make that much of a dent. Let's just be clear. But they're basically just kind of putting on some leverage that they really didn't have before. So if you actually take a look down at the long-term debt, right? So let's go to other liabilities, total liabilities, and total current liabilities. What you notice is, do you guys notice anything? Total liabilities, we don't really have any. So we have operating lease liabilities and other liabilities. We don't have any long-term debt. That's basically what I'm trying to highlight. All right, what are you guys talking about? I turn around and I come back and you guys are talking about Paul and Mullen. What is going on over here? All right, let me scroll through this because I don't mean to skip over anyone. So after it's issued, I will be buying my home with APE. Oh, okay, so you guys are also buying homes. I'm actually curious, how many of you guys are buying a home right now? Yeah, I agree, P. Morton. So that's where, you got to shop around sometimes. Like people who are buying a home in like 2020, 2021, if it's like your place of living, sometimes it doesn't matter if you're overpaying, if you're using it, right? It's a use. And if you're not going to sell it for 30 years, under that perspective, if you have a secure job and all that, and you can afford it, et cetera, it's fine. It's fine. That's how I view it. Some people might view it differently, and that's fine. So let's see here. Biden's world is what's going on. Oh, okay. So it's getting real political now. No, I'm kidding. All right. So yeah, my opinion on Meta or the most recent earnings is I look at the allocation I have, which why not? Let's actually go to. I'll pull it up. Let me see, because sometimes you guys are in here with me. So let's see how many people are actually in here. Where are you at? I gotta do a portfolio update video. My gosh, it has been a long time. I mean, there hasn't been really many updates, so yeah. So Meta is sitting still at well, it's actually risen up a little bit because I gotta actually do the update, but yeah, it's sitting still around the same. It's not really any different. So yeah, it's sitting at about 7.05%. I mean, my main focus as far as social media tech goes is still Google. But that's basically because it's legacy at this point. Amazon, I'm a bit restricted in terms of buying it, so I can't just do that willy-nilly. Look at that. So let's see. Thor Industries really did rally. So it really was cheap. So that one was kind of a mistake. Cirrus Logic, everything's kind of recovered now, except for, of course, the watch positions on the mining companies. Wow, look at that. ConocoPhillips literally recovered. All right, so let's see if I have egg on my face with ConocoPhillips, because that actually might happen. Let's see. Netflix looks good for now. GPN looks good for now. Activision Blizzard even making moves. AbbVie, yeah, it's still down. Leggett & Platt recovered nicely, actually. Leggett & Platt's been doing really well. Unum's the one that's been designated. So Unum, those calls are not looking too good right now, because I think the exit price, or including the contract, is around 37 something. So right now, technically, I have that opportunity cost. So again, that's why I didn't do it for the full position. But we'll see how that kind of pans out. And then I bet you if I actually check now, I can get a better premium now. So we'll see. Maybe I even get a nicer premium on the rest of the shares. And then kind of going through some of these. Warner Brothers Discovery is the one that I said in the video that I might add more to it. I'm telling you guys now because I didn't think it was that bad. It was bad, but it wasn't like that bad. I think a lot of people are a bit exaggerative. Now, Molson Coors Brewery, that one still holding. That one was the one I was actually talking about in the video. That's not going to come out because it's low quality video. Let's just face it, it's low quality. The banks, I probably... Well, I added more aggressively to JP Morgan. JP Morgan is the one I just like laid it down. I just went straight in at 2-point-something%. And then Citigroup and Bank of America were the ones I was nibbling. Probably, I'm kind of content with it, to be honest. But if I buy more, I'll let you guys know. Okay, so anyways. Again, this could just be like some people are saying, and I see some of you guys are saying, fat cat bounce. So... you might be making the judgment that it might be a good time to take some profits. Yeah, maybe it is. So this program has been so crazy that I literally have not been able to do a portfolio update, guys. So I will do, but really nothing much has changed. So yeah. Okay, so some of the other key points that I wanted to talk about with Meta is, as far as their investments go in the metaverse, that's a very interesting number, 666666. It's all sixes. I'd say that's a call option, right? They're pretty much versus where they're at now. I think they're at a good value, right? At a good value. They're not at the best value because these are the prices I'm not too excited at. They kind of just left my buy zone really quickly. It seems like they get there and they immediately leave. So we're seeing some strong support around that level, which is frustrating. I mean, we were able to buy some shares under that, but not really many. And you guys know the Gulp price is 160 and below. So yeah, it is what it is. You can't really fight it. If you don't get the opportunity, you don't get the opportunity. Cole actually brought up this point. He asked me the other day, at Trucko, we're going to do Canoo Health. He said, okay, if your price is $10 and the stock is trading at, well, let's use a different one because he used a different number. I think he said it was like, he asked me if, I'll just use a different one. Let's say it's $100 and it's $101. Would I be buying? I'd probably be buying a little bit there, right? I'd be buying there because you're being too much of a stickler at that point. It's within the range of error, you could say. So I'd definitely be buying. Just like, I mean, you can see how I've done it. So with Netflix, when I started buying Netflix, you guys remember that. And what price was Netflix? Well, Netflix was not too, it was not at the price that I liked in the videos, but yet I was still buying it. And that's because that's how I like to scale in these positions. Whether or not you agree with that strategy or not, you have your own strategy, that's fine. And you can kind of see just how I like to do it, right? And so it turns out we've gotten to a decent cost basis because we started adding heavier and heavier and heavier, and the prices that I really did like, for now, it looks good, but it could just turn around and look bad tomorrow. Who knows? But yeah, that for me, it doesn't really concern me because everyone's situation is of course different. All right, so some people were asking about Dow, but we're going to go with Canoo Health first because Trucko's been asking about it for quite some time, and so I want to oblige him by that. So let's go in Canoo Health. So Canoo Health is let's just go here. So I'm going to try to dissect this company and try to understand it. So I can already tell last time I looked at this was a SPAC. Based on this price movement around here, it was about $10. So, when it was flat like that, that's his SPAC days. So I'm going to find out what this company does because they're headquartered in Miami. Okay. All right. So what does Canoo Health do? I feel like I've seen this symbol out here before. Canoo Health difference. Our mission is to transform healthcare. Are they a healthcare provider? Okay, so they are. So primary care, patient care, Canoo Dental, Canoo Life. What is this? They sell life insurance? Mind and Body. Are they an insurance company? What are they? Patient care. Okay, let's... no. I want to see what you guys do. Let's probably find it. We might be able to find it in the investor section. Canoo Health operates primary care centers. Okay, so they operate the centers, supports and affiliates medical practices in Florida, Texas, Nevada. Blah, blah. Okay, this is a company, personalized patient care and proactive approach to wellness. Okay, whatever. All right, so this is a healthcare operator. Okay, so but it's doing so on like a localized level. Let's see here. I'm going to see what's the sales pitch. Give me the sales pitch. Let's go to, let's go here. All right, so let's walk through the sales pitch together, guys. And so, I mean, it might be a gem or it might be completely overvalued because a lot of the SPACs were. So let's kind of go through this. And just because, I mean, it's a hard business, I'll say that. Large growing market, yeah, that's true. Because they're kind of probably pointing to the senior population. They always point to the senior population as a point of like, oh, look at our total addressable market or our TAM. Recurring revenue, over 95% of our revenue is recurring monthly payments from payers to provide for healthcare needs of our members. Okay, so is there a subscription probably having to do with some of this? Technology-driven population health management, industry-leading independent primary care. Okay. Why are you saying recurring revenue? Nearly all of our revenues comes... Oh, okay, that's... Okay. Through health plans. Okay. I am understanding now. So now this starts to get a little bit more reliant on the whims of politics. All right. So total revenue. Oh, wow. Look, 100% revenue year over year. Revenue by revenue. You did tell me this, Trucco. You said revenue by revenue. Yeah, so you did say this. Let's see here. Adjusted EBITDA. Okay, so they're actually have positive EBITDA. Okay. Okay, that's better. I imagine that at some point, this will get there. Some bussy. Okay, so what are you guys saying? I've been waiting for this moment. All right, so you've been waiting for this moment. Membership and revenue guidance increase. Okay, so they're expecting that. Okay, organic growth. So organic growth, what are we seeing here? So organic growth represents the growth from our base business and the growth from our integrating as existing affiliates of our small independent practices. Okay. All right, so basically, yeah, they're growing. This is like their same-store sales growth and their growth from adding new sites, right? You can see that color-coded. All right, so what else do they got here? I mean, access. Okay, cool. So basically what I'm investing in here is something that is reliant on government programs. It is reliant on that, but an operator in healthcare. Okay, so we got a growing TAM, supposedly, because the elderly population is growing. Cool. Total memberships here. Okay, growing. Okay, full FY. Okay, so... Okay, so that's their guidance. Are they profitable? No, they probably have they have a lot of costs probably that they're carrying over, and all well and good. They should probably, I mean, they have to do that, but it's in their interest. Total members. Okay, so this is you're gonna have to be paying attention to total member growth, financial summary. I mean, what's their balance sheet position? Because now that's gonna be a concern to me, because if they could have, growth or whatever, and it's just all the. All right, so let's go into the most recent one, and let's kind of see some of this. All right, so we're going to see if anything pops out. All right, something's already popping out here. They had a ton of cash before, now they don't. Did they invest it in a lot of sites? Maybe, most likely. But that's probably their SPAC cash. It went from 163 million down to about 47 million. Okay, so accounts receivable. Remember, just pay your bills, guys. Just pay your bills, and that's not a problem. I'm just joking, of course. You guys remember the reference, hopefully. Otherwise, you guys are gonna be like, "What?" We can do Uber next, by the way, if you guys want. There's something popping out of your pants. What do you mean? There's not something popping out of my pants? Matthew Matlock, are you somehow looking at my pants? Are you somehow peeking down there? If you are, tell me how you're doing that. What kind of powers do you have, man? All right, so anyways, long-term portion. Okay, any long-term debt? No, I don't see any. I don't see any long-term debt. Let's see if there's any current liabilities that would be of concern to me. Accounts payable, accrued expenses, related parties. Ooh. I mean, let's look at the matching principle. Is there anything that I'd see that? I mean, nah, it's not really of a concern, man. Yeah, I'm not really too concerned. Yeah, not too concerned, I'll say that. Contingent consideration. Yeah, nothing really concerning here, aside from, this is probably investment. This is honestly probably some investment that occurred. But yeah, nothing really too concerning here. Revenue. Okay, so this is the breakdown of the sales. Capitated revenue, related parties, fee for service. Okay, so obviously that one's the larger one, and it is growing. Okay, so there we go. If I had to see how much share dilution is in here. Okay, so this is Canoo Health. Hasn't been public for long, so yeah, there's not really much data to go off of this. It's not really like a dilution event; it's just an IPO event, so nothing crazy. So, okay, so what I'd have to say, Trucko, is there actually might be something in here. The thing is, a lot of these operators, like for example, I'll give you one that's a big boy. So this is the big boy. So let's review the size of this company. This size is 2.38 billion. And then the big boy, we've talked about it in the past, is HCA. So HCA is the large hospital operator. How I discovered or came across this is originally way back when I first looked at Medical Properties Trust, the REIT that I own, or the one REIT that I now own in the portfolio again, because I've been trying to buy some REITs again. That's actually one of their largest tenants. So fun fact. But anyways, you might want to actually take a look. What I would probably do is. It's not going to be one-to-one because this is small, starting up and coming, and they do run different types of facilities. Like HCA is a hospital operator. This is more of an acute care facility. So their economics are probably going to be pretty interesting, I'd say. It's a lot more fragmented, what Canoo Health is getting into. So that's going to be pretty interesting. If they actually can, they have some secret sauce, right? If they have some secret sauce, that's I would say that it actually could be interesting. So not that bad of a catch. It needs a lot more research, but not that bad. It's kind of like Rick, funnily enough, but not the same thing, right? Because Rick, for example, they found a way to have this secret sauce. No, not all in. Well, I mean, not for me. I don't know about you, but you might decide. For you, yeah. But for me, no. For me, I'm not really too interested in owning a medical healthcare provider, but you could do good if you know something that I do not, let's say. All right, so let's see what other ones that you guys were asking. So I'm scrolling through the questions. All right, so Canoo Health, please. I already went through that one. All right, we can do Tesla next. I see some questions for Tesla. You guys want some Tesla? We can do Tesla. So, single-handedly, I am responsible for half of Tesla sales. Just kidding, of course. But anyways, where am I going? I should be doing it here so you guys can see it. So let's see. I don't even know what Tesla's been doing lately. All right, so Tesla had a red day today. What was the market like today? Anyways, I think whatever, that doesn't matter. Well, I can see kind of comparatively. Whatever. All right, so Tesla's down 2.62%. I mean, in the past month, I think it's had a crazy month, about 22.98%. Year to date is still down 28%. Now let's go to the website. All right, so something I want to highlight, Tesla car prices have been creeping up a lot, I'd say. So let's go to like custom order. Oh, not the Model S. Let's go to the Model 3, for example. Model 3 custom order. They simplified it a lot. So you have the Model 3 long range, Model 3 performance, and Model 3. Oh, by the way, this is the fake prices. You got to go to the purchase price because the potential savings, I'll go to the real purchase price. So the real cost of the cheapest one is going to be about $50K when you consider taxes and everything. And then, you have the Model 3 long range, which is probably the one that I'd say is the most worth it. And then the Model 3 performance, because the tires on the Model 3 performance are not the best, I'd say. I mean, if you're living in a cold environment, if you live where I live, you'd be fine. But Model 3 long range is probably going to be the best value, and you can actually cut off, I think, $1,000 or $1,500 if you go for the longer range wheels, and you can actually take those off and then have a lot of customability or customizability. But anyways, suppose it gives you more longer range. So my point is, for now, they're still quite expensive for a vehicle. So they're still operating within that luxury vehicle market. We've heard tons of times about, okay, well, they're going to release the Model 2 and that's going to be great and stuff. And let me be very clear. The Model 3, a lot of Teslas have been plagued with a multitude of flaws or production flaws. So, for example, you got to pay attention when you pick up one that your panel gaps aren't that bad because they're notorious a little bit for that. The Model 3 used to have, I forgot what the part is called, but there's a part that they use some organic components inside, and it rots and it produces a smell in the cabinet, and you got to get it replaced, and it actually costs, I think, like, it's not even covered under warranty, which sucks, and people were getting really pissed. So if you live in a hot environment, it's not good. Now, the newer ones have been, they've been fixing that, so less of a problem. But the new ones have, you can see, well, if you see a Tesla on the road, you can tell it's a newer one because it has the black handles, and as well as when you see the mirror or the windows on the side, the front ones, not the back ones, the Model Y does. The front ones have the double pane glass, so it gives you a little bit more, silence in the cabin. So it's pretty good. Before they didn't have that, and you were paying for a lot for a car that really didn't have that, right? And I think my other car had it, and it was a cheaper car. So it was kind of a what? All right, but with the Tesla Model 3, of course, gas prices so high, you might be thinking like, okay, electric, but it's still pretty expensive. I mean, I don't really see the justification. No one's going to get this thing to save money on gas. You're doing the wrong thing, I'll tell you that. One car that you probably should get if you're really caring about that and you really want an electric car. I know you guys are going to be like, no way, and you're going to get, let's say, easily turned off by this. And you guys, some of you already know what I'm going to say, but it's Nissan Leaf. I mean, this thing is cheap and it's still electric. You're not going to get any range. You're not going to turn any heads, but you get an electric car for a cheap price. Anyways, going back to Tesla, let's go to the investor relations. So let's go back here. Oh yeah, we also have all these other businesses like the solar roof business, solar panel, solar roof. Okay, so the solar roof, I don't even know if this is, oh no, is this finally available? Because these are the ones that make it look like tile. So you see that? I think that's what yeah, it's these ones. They make it look like a tile. And so this is something I'd actually get for my house. Not gonna lie. Yeah, I'd probably get this. How expensive is this? I'm actually curious. Complement your home's aesthetic. Okay, wait. Okay, let's click on order now because I'm curious on this. Oh, okay. I'm not gonna, just do that. So I have to like inquire. I guess that makes sense, but I would prefer like, give me an estimate of like per size and I can kind of figure it out. But all right, cool. I'll explore that later. All right. I didn't know that they were offering that yet. All right. Give me the investor relations. Where's the investor relations? I'm going to have to probably type investor relations if I don't find it. I always forget where it is. Oh, there it is. I'm blind. Let's go. All right. So they just reported earnings on July. We are going to, let's download the shareholder deck. All right. So nice, aesthetically pleasing black background PowerPoint. Cool beans. All right, I want to make sure that you guys can see everything, so I'm just going to be going through this a little bit here and there. So, and I just want to make sure I'm not. Yeah, we can look at MHO too. We can look at whatever you guys want. This is just a hangout. Any chance you've taken a look at Adyen? I can take a look at that one too. Just remind me. Check Tencent. Are you familiar with the business model? I own Tencent. Well, I own Tencent through Prosus. I bought Tencent out of principle. Well, you can go check out this video. Here, I'll pull it up. You have brought my attention. All right, so let me go here. Let me go to the content library, and I can use this. So I know I posted it in December, the beginning of December. I think it's this one on December 2nd. Is it this one? No, that's November. Okay. Maybe some people have raised. No, I clicked on the exact same video. This is frustrating. I gotta improve how this actually works. Okay, so buying Baba and Tencent. Yeah, this is the one. All right, so this is the video. You can go back and check it out. I mean, this is back when the channel was smaller. So December 2nd, I almost was becoming known by not on purpose, but for poo-pooing on VIEs and stuff. And in this video, I just make a point that I'm going to be buying them. I bought Baba and Tencent actually. And then I was only going to make a single purchase. I discuss it towards the end. You can kind of skip it towards the end. It's when Austin leaves the video. And then since then on, I own some shares. I did a tax loss harvesting strategy with Tencent. I bought Prosus, and it was also part of my thesis that a lot of the discount in Chinese stocks was sentiment based, and I did some videos on that as well. I also promised that I wouldn't talk bad about Chinese stocks until they're up again. So you haven't seen any videos, and it's good because the channel isn't being known as like I'm the channel that poo-poos on VIEs all the time, right? Because I made too much content on that. But anyways, I did make content regarding the Chinese sentiment, and like quite literally, it was kind of Xi Jinping saw my video, and then he didn't see my, obviously, small channel. But the very next day they did something, and all this Chinese stocks like went up. But yeah, Prosus went up more than Tencent did throughout the time period where I sold Tencent, bought Prosus, and was able to tax loss harvest. But anyways, link which one? I got it. I got all the links for you. If you ask me which one, I got it. I use it. You can find all of those videos in the content library, by the way. I have to update the content library, but the content library is supposed to be an easy way for someone to kind of just go through that and see older videos, kind of organized by topic and stuff like that. Anyways, it does take me some time to do it because I got to go in manually and like date them. So they're hyperlinked to the date that they are from. So anyways, so kind of going back to Tesla. All right, so Tesla... okay, so they have cash and cash equivalents of 12 billion, accounts receivable of 27,808 billion. Okay, so not accounts receivable, marketable securities. I read the wrong one. Okay, so accounts receivable, again, if they just pay their bills, man. I don't know why they just don't pay their bills. So I'm going to pull up another company called Ford, and I'm going to dispel a rumor with Ford that I've already talked to you guys ad nauseum in the Discord, but now I guess the YouTube audience is going to get to see it here. So because I go over some of these topics in the call on Sundays, and I'll kind of let's bring up Ford as well. All right, Ford and investor relations, and I know some of you really like Ford, and we can have that discussion. So, and some of you really don't like Ford. So there's some. Well, we'll talk about some of the accounts. Anyways, going to Tesla, I want to show you that there's something missing here that we're going to see in Ford Motor Company that Tesla doesn't have yet. So Tesla works with loan providers. They actually don't write any of the loans themselves as of yet. So, for example, when you go through the app, you can see how easy it is to actually get a Tesla. So if you go on the app, you fill out all the paperwork there. It's digital. You can turn in your car. You send pictures of your old car, and they're like, okay, this is what we'll value it at. Accept the terms, blah blah blah. You send in your information. You get your loan right there. You don't have to step into any dealership. And then when everything's ready, when the car is at the delivery station or the pickup location, you go and you pick up your car. Your phone is your key, etc. Blah blah blah. Anyways. It is the future, bro. Okay, so let me kind of go over some of these parts with Tesla investor presentation. Oh, not this one. Where are you at? Where'd I throw you? Oh my gosh. Okay, here we are. All right, so kind of going through some of this, we see automotive revenue. This is something that Strongman points to a lot because he's right. So the automotive revenue is pretty much all of the revenue. So some people like to call it, another type of company, sure, whatever. But for now, it's still an automotive company, and it still does generate a lot of money from the automotive sector. I'm not buying my Tesla robot yet, but maybe when it comes out, I don't know how good it will be, but anyways, kind of going through some of this other stuff, we can see the production rates. Obviously, the Model 3, Model Ys, they're mass-produced product. And for me personally, I don't think the Model S is necessarily worth it. It's a car at the end of the day. You should rather invest that money in something. Maybe if you want to have, I don't know, whatever it is you think you get with a Model S or the Model X actually. The Model X is pretty nice. The Model S, I don't think so. All right. The Model S Plaid, yeah, it's like the Model X though. I don't know. It's pretty cool to have perhaps the fastest SUV in the market out there, right? That's a bit of a flex. But anyways, you got the Model 3, the Model Y. The Model Y, by the way, has, I think, the military-grade filtration system, which is just a cool little gimmick. It's a gimmick at the end of the day. It's not necessary, but, it's cool to know that if you're in a Model Y, you're like, well, it's a newer Model Y. You know you can go through gas and you're just like, I'll be fine. There's a chemical attack. You're like, I'll be fine. My family's going to survive. Everyone else won't survive. Everyone's going to be running to the Model Ys to get into the Model Ys. Now that you know that. And that's why you follow Capital Mindset on TikTok, so you can learn how to survive a chemical attack. I gotta throw that out there. Those are always funny. Anyways, getting carried away. So this is the production levels in the different places. Of course, yes, they produce a lot in Shanghai. They produce a lot in Berlin, not as much, and they're going to be ramping that up. That's a whole point. And of course, Texas, same thing. So Berlin and Texas will one day be upwards, better than perhaps where California is, the older factory. So the older factory, of course, will still be there, but the newer factories are retrofitted with the newer capabilities for the newer production lines, et cetera. But yeah, newer, better. Just newer equals better. And this is where I was saying that there is so much demand right now that this is all for all electric cars. This is something one of you guys was actually talking to me about in the Discord call, which was right now there's not enough electric cars to go around, and pretty much anyone who just produces an electric car, it just gets sold. You produce an electric car, it gets sold. And that has a lot to do with, I'd say, where gas prices are at, where consumers are kind of thinking, and consumers are thinking, okay, what's going to happen to gasoline in the future? They think it's going to continue to go up forever. I don't think that, but a lot of people do think that. I think that elevated gas prices is a huge potential that it stays, because that's a separate argument to make into what capital investment has been over the past couple of years. That's a separate thesis, but all the same, some of you might hold that, and so. We're kind of seeing the ramp up in production. Of course, the United States and Canada is going to be a bit faster because now they have two factories. But yes. So that's all well and good. That's good news for Tesla. I think that Tesla should, take advantage of their cheap cost of capital with share issuance, and they could raise a ton of capital, enough that no other car company can even compete in terms of having money on the side. I mean, they have that opportunity. They just don't want to do it. They think they can just do everything all at once, but maybe they can. Maybe they can, and we're all just completely wrong on that. All right, so some of these financial statements are actually in here, and we'll just look at it in here then and just see how it is. So I want to show you guys this way so you guys can see from left to right, because the most recent one you'll see is on the top right-hand corner. So revenues, automotive sales, you can see how massively they have grown quarter over quarter. So Q2 2021 to Q2 2022. Whether or not this will slow down, I don't know. I have no idea. I can say that it did seem that they were having trouble keeping up with demand because they delayed my order for about a month. But yeah, what are you guys talking about over here? I see BurgerFi. Anyone done BurgerFi? I like BurgerFi. BurgerFi, the custard shakes are pretty good. I would love to audit Rick. Yeah, I think all of us would like to audit Rick. What's going on in there? All right, so balance sheet. All right, so looking at the balance sheet here, they have, again, cash equivalents. We already talked about this, about $18 billion. And long-term debt, what we do see is, and you probably see a lack thereof, well, we see debt, finance, lease, net of current portion, deferred revenue, and other forms long-term. Their balance sheet is pristine, okay? And I'm going to bring out Ford later because some of you make this argument a lot, by the way. So I want to actually say, does anyone want to talk about the Ford debt? I'll wait for a response on that. There's a bit of a delay, but I'll wait for a response on the Ford debt. Does anyone want to have a conversation about that? I'm not saying come on, but you can talk to me there. Yes, okay. You want to talk about the Ford debt? All right. Let me go ahead and start pulling the financials because I have one yes. Okay, so we're going to do the Q2. Oh, I'm in the wrong thing. That's not the SEC filings. All SEC filings. For debt, sure. Yes. My favorite thing to... oh, okay, that's something else. EVs are telling a story. The only person that will be able to avoid it is the individual with a stable income and high net worth. I think that eventually they're going to be cheaper, but yeah, for now I think that's the case. Chicken Genius once said that GM doesn't even make money selling cars. Is that true? We can fact check that. Fabio, we are all nerds. Okay, I'll take your word for it that you guys are all nerds. So let's go to the SEC filings. Let's go to the most recent 10Q and bring it up. All right, so this is Ford Motor Company. All right, so a lot of people, when they talk about Ford, heck no, I'm not a nerd. The grouper sandwich was legit. You guys are talking about food over here. All right, so I forgot this was a live stream. Yeah, I know. All right, so financial statements. Okay, so let's go to the balance sheets. Okay, so this is often what people cite with the Ford debt. They like to go here and they go down to, let's see. All right, so they go here, assets, payables, and, well, actually, no, let's scratch this. Let's go away from here. Let me first use what people typically use. All right, so let's go on like Yahoo Finance. All right, so Yahoo Finance. Isn't calling someone a Yahoo an insult? I think it is. I don't know. All right, so let's go to Ford. Love how those are the trending search results, Rivian and all that jazz. All right, anyways. Let's go here. Let's go to the financials. Let's go to the balance sheet. Let's go to total assets, total liabilities. Okay, so I hate this feature of, I hate this. I absolutely despise this part of Yahoo Finance. This like drop-down feature, it just hurts my eyes too much. But it's fine for what it is. All right, so they say long-term debt and capital. So a lot of people point to this, and they say, okay, this is a huge problem. Oh, you guys aren't seeing the line items. Here we go. All right, so there we go. So these are the line items, long-term debt, and they go, okay, 89 billion, 111 billion, 102 billion, 100 billion, right? So basically, it's just been, bad, poo-poo all over the place, tons of debt, right? And I go to Tesla, and I'm like, all right, where's Tesla's debt? Where is Tesla's debt? Okay, so what is going on here? Debt to free cash flow is absolute dumpster sauce. So thinking past the surface, let's use your name. Thinking past the surface, my friend. All right, so I'm going to tell you to think past the surface here. So the balance sheet here on Tesla looks pristine. All right, and you guys should see that here. There's not really that much debt. They have a lot of cash, no debt. All right, let's go to Ford again. Where's Ford? Where'd I put you? So if you go on Yahoo Finance, you're just like, oh, they have a ton of debt. All right, this is terrible. I'm going to show you a little bit of a different story. Where did I shove this? Uh-oh. I lost the Ford quarterly statements. All right, I probably put it somewhere. Hold on. Oh, there you are. All right, let's bring you back now because I need you. I need you again. All right, and I'll discard you because I don't need you right now. Well, my wife messaged me on Discord. All right, so let's see what's going on here. So what I want to show you or bring your attention down to is this part. All right, so you have this debt payable within 1 year. All right, this is the short-term liabilities, by the way. And you notice this, company excluding Ford credit. So this is the company debt due within 1 year. Look how much cash they have. Oh, they can pay that off real easily. What? Well, that's strange. What is this Ford credit thing? What is this? Ford credit. Ford credit. That seems like it's important. Well, it is important. And it's a big distinction to make. All right, so then let's go down to the long-term portion of the current of liabilities. And we see, okay, long-term debt, note 14. We can go to note 14 to find out more information. And we can see, okay, again, this wording here. Company excluding Ford credit. Well, this is the consolidated balance sheets. All right, so what does the consolidated balance sheet mean? All right, almost think of this kind of like, a course video. All right, for those of you who are kind of getting newer to this. So consolidated balance sheet means that there's multiple balance sheets. I'm simplifying it. There's multiple balance sheets. And what you need to know is they're shoving it all into one. Right? They have subsidiaries and all that jazz. And they're shoving it into one thing. So Ford Motor Company has two really big segments. One of them being Ford Credit, right? And they split it off, right? They show you in total together, but they split it off in two separate line items. And this is very important because if you combine them together, you would be, of course, of the mind saying they have a ton of debt. They have about, what was it? What was Yahoo Finance? So Yahoo Finance, 89 billion in debt. And you go back to where I keep losing it. Where the heck am I putting this? Right here. All right. Oh, no, this is not it. This is Meta. All right, I'm going to close off Meta so I don't come back to this. All right, and we come back to the actual financial statements. We see Ford Credit, 71, and company excluding Ford Credit, 17. Well, what is this Ford Credit? Okay, well, that's the bank arm that we see inside of this company. All right, and if we go down further, you're going to be able to see the separation. So let's go here to page 13, and we see the different parts of Ford Credit. Okay, so we see consumer finance receivables. Consumer finance receivables. What does that sound like? Well, that sounds like something you're going to receive, right? Something you're going to get. So we have retail installment contracts gross, finance leases gross, because leases, by the way, are a form of financing. And then retail financing gross. And then we have unearned interest supplements. Okay, but anyways, the point is we have Ford Credit here at the end of the day. This is basically what they ascribe to as the fair value. All right, they calculate the fair value at the end of the day. I think they probably net out the part that they don't think they're going to receive. But yeah, and they have non-consumer and consumer facing. But my point is that thinking past the surface, thinking below the surface is, yes, you got to think underneath the surface. You got to go a little bit deeper, and then you kind of discover that, well, they don't have as much debt as people think they do. It's really just another business that's taken on all that liability. All right, so here they have, oh, where did I lose my mouse? All right, there we go. Allowance for credit losses. And they're going to show you, this is their breakdown. I'm not going to really break this down too much, but this is basically them saying the risk profile of this business line, or like the credit that they think they're not going to be able to collect at the end of the day. So, you know, if we go through a tremendous downturn, the risk is still there, just not in the way you think it is. So let's again go back to the balance sheet. So we have something in accounting called like the matching principle. You may hear that here and there, but this Ford Credit is oddly similar, familiar to what we have here in terms of Ford Credit finance receivables net of allowance. We see we have 32 billion due, and then we have Ford Credit receivables due elsewhere for about 51 billion. Okay, so we have in both the liabilities and the current asset, or liabilities and assets, sorry, we have Ford Credit showing up again, okay, because again, consolidated balance sheets. So I hope you guys, what you took away from that is Ford is not as indebted as you might think, and so don't dismiss it entirely just because of the debt, okay? Thinking past the surface, okay, so you're taking notes there, I see. Yeah, so that's some interesting accounting right there, capital my capital. So yeah, and that goes to show you a little bit of a flavor how different businesses will have different tastes for how you have to analyze them. And they can be very different. So Ford, just from now on, when someone tells you, there's 53 of you or however many will watch this stream, you now know that if someone makes this argument to you, you can defend this. Okay, so I have a video on Rick. We'll analyze Rick, because let's analyze Rick. Let's actually analyze Rick. So you guys... and this is an unironic one. I'm not going to be like Learn to Invest that you guys did this to. That was kind of funny. I love the fact that you guys kept spamming the live stream until he analyzed Rick. So RCI Holdings. Well, let's go to hospitality.com. All right. I love how it says not secure on my computer. That's scary, but yeah, we'll deal with it. So where do I go? Home. I think we are home. And company and investor information. Okay, let's go here. Let's go to company profiles, SEC filings. So go to the SEC filings. And, okay, pretty, they don't host it locally. So you just take you right to Edgar, which is fine. All right, so they have the most recent one, which is on August 9, 2022. That's fine. Quarter ending June 30th, 2022. That's fine. And also take a look at the 10K. So let's open this one in a new tab and that one in another tab. All right, so, okay, so let's go to, and you see, this is why I like the PDF version. Yeah, I hate this version for this reason. If you wonder why I don't go to Edgar, it's because of this. I don't like it this way. It makes it a bit more frustrating. But I'll try to work with it to try to make it easy for you guys to follow along with me. And while we're at it, actually, let's get the investor presentation too if they have one. Where are you at? Investor information. Let's go back. Okay, well, it takes me right here. Third quarter. Oh, no, you have it. Okay, because I hate this one. It's so annoying. All right, and while I'm I guess I have to do this. Open link, a new tab. And where's that 10K? I believe it's the... Yeah, here it is. All right. So, yeah, I don't need you. Go out of here. Get out of here. Be gone, demons. All right. So this one is the 10Q, and this one is the 10K. All right. So let's go to the 10K. We're going to go to the financial statement. So something about Rick that you guys may not know. Oh, I hate it. It's not hyperlinked. All right. You know what? You guys suck. Okay. So fix that on your PDF for me. Make it easier for me. Not a hassle. All right. So something you guys should know about Rick Hospitalities is Rick Hospitalities operates different business segments. They operate in the nightclub space, and I'll kind of show you guys here. So founded in 1983. We're going to read this out. Founded in 1983, Rick's Cabaret brand pioneered the creation of elegant gentlemen's clubs, featured beautiful dancers, and high-quality restaurant service. Since going public in 1995, we have transformed into a leading hospitality holding company. Our subsidiaries own and operate in over 40 establishments under the multiple brands throughout the nation. Our name changed to RCI Hospitality Holdings in 2014. We are listed in NASDAQ, blah, blah, blah. Okay, so you got the picture. You see the brands here on the right. And so what are some of the secret sauce? Well, there's not many players that are these acquirers. There's not a lot of capital chasing into this. And if you know anyone who does own a nightclub, you probably know that it's a very, very profitable business. Now, there's one problem with it. It can be very spotty in terms of popularity. 1 year, a couple years you're in, a couple years you're out, right? So that's a bit of a problem. So RCI Hospitality, when I looked back into it and I was looking through some of its history, I saw that in the past the CEO was focusing on acquiring the okay, so I'll actually talk to that, Andre, because good question. This is a legit question. So Andre is asking, as a legit question from an investor standpoint, what is the percentage of cash tips that don't get reported? Well, I actually looked into that because that was a concern for me. So apparently, a vast majority of Rick, the company's profits, come from credit card transactions. People go to these establishments and they put in their credit card information in exchange for cash. So they receive cash on premise. And so Rick does have a lot of credit card transactions. The tips, however, is where the cash really goes. So it's more on the liability. That liability falls on the actual, people performing the activities. Let's just call them that. Very similar to a nightclub. A nightclub, you go and, you're a bartender. You can make a lot of money in a nightclub, by the way. Fun fact, okay? So you can make a lot of money bartending at a nightclub. But anyways, going back to this, these companies or these types of businesses, nightclubs, whatever, right? They make a lot of money, okay? Now, the problem is, for the owners of this is there really isn't that much demand to purchase them. So you have basically two big acquirers. I forgot the name of the other one, but Rick's is the publicly traded one, and they are, doing their thing. So in any given year, the acquisitions might not be many because you don't really have a ton of, let's say, firms that are too excited to acquire these businesses because, they have to justify it to their investors. They got to say, okay, well, we're buying a gentleman's club. That doesn't sit well. So this is kind of like, if you like ugly businesses, this actually might be up your alley. One that will never be winning any ESG rewards. Okay. And it's just like, it definitely won't be winning like A+ on ESG ratings or anything like that. So far from it, I think. So I think it's always going to be underrated. I don't know what multiple it's going to ever trade at. I think it will perpetually trade at a cheaper multiple. I think even these places, I think they trade at pretty cheap multiples, like 3 times earnings or 4 times earnings, something like that. So each time Rick Hospitality acquires one, they're acquiring one for something that you and I would love to acquire a business for. We would love to acquire a very profitable business for 4 times earnings, 3 times earnings. It's because there really isn't that much demand for acquiring them. And there's a huge risk in terms of operating them. So, there's a lot of risks associated with making sure, there's not any trafficking going on. There's not any illegal activities, in the form of, performing acts for money that is illegal. So you got to make sure that you're in compliance with that. So that's an added responsibility for this firm, and that's a bit of a risk. Okay, so I did notice that, and RCI Hospitality has been pretty good at that. Now, there is a problem. I mentioned this in the past. So the CEO and the management team were in a bit of trouble because they did actually have a disclosure problem regarding compensation. So when I looked at the number, it didn't seem like it was a big deal. A lot of the it seemed like it was in the couple hundreds of thousands of dollars over many, many years. And it seems like the CEO, this is what he's done. Okay, so he's not someone who went to a very prestigious school, didn't get any formal training, nothing like that. No, he learned as he went, and there's a lot of respect to that. And so he knows this business in and out, to say the least, I would say. But yeah, just looking at some of this, let's go through some of the financials, and we can kind of go through this ourselves. So let's look at the balance sheet right here. So this is the 10K. All right, so this is ending in 2021. And I think it's performed really well. Let me show you, at least in the past 5 years. It has outperformed the market in the past 5 years. It is up 180%. You can see pretty much all the returns happened right after the pandemic. Now, this is not an endorsement of this company, but they were able to actually grow a decent amount throughout the pandemic as a lot of these smaller fragmented competitors began to say, oh, well, I want an out here. A lot of uncertainty. RCI, as a publicly traded entity, had a lot of ways to raise capital. They were very diversified, because here's a problem too. Let's say you do own a nightclub and you're a very profitable nightclub, but you own it in New York. You own it in New York, and let's do it like this. The year is 2020. You own one of the most profitable nightclubs in all of New York City. There's no reason for you to sell. All of a sudden, a pandemic happens. Your facility is not located in Florida, where you would have been fine, because trust me, people were clubbing throughout the whole pandemic. It didn't really matter. But you're in New York, so it's a little bit different. And over there, your business was forced to close. Now you got no cash. You still got rent piling up. Maybe you're making some negotiation with the landlord. I don't know. But point is, you're nervous. You got, and the rent's not cheap, right? You're a nice club in Manhattan. Rent's not cheap. So what's going to happen to you? Well, you're probably trying to look for an out, but at the same time, no one else wants to buy you out. Now, RCI Hospitality, they have properties everywhere. They don't only have a facility in New York City. They might have one in other states that are still operational and producing cash flows. So you, as the single operator, maybe you're going to say, hey, RCI, you want to buy me out? And RCI goes, yeah, maybe I will. Maybe I will. So that's the proposition that RCI had throughout that time period. That was, to a benefit. And the other operator, I keep forgetting the name of it. Some of you might remember the name of the other one. It's privately held. You're not going to be able to invest in it or anything like that. But yeah, I love this comment section. It's basically all talking about RCI. You guys, I've only been okay. I actually don't know where he went to college, or if he did go to college. I just know that it's not like he had tons of experience or anything like that, because I see Fuhat's asking a question about where the CEO went to college. I have no idea. All right, so kind of going over this, you can see the goodwill portion of the balance sheet is pretty big, all right? It's not everything, but it's pretty big. It's more than 10% of total assets. And they've been acquiring assets. These assets are other competitors, other businesses over time, and they've been accumulating, all right? Tyson Industries says F Rick. Okay, well, yeah. So this is definitely not a business going to be for everyone, just like Altria or Philip Morris. But, when I looked at this as a request from you guys, I got to say, I was like, okay, there actually is something here. There's a thesis that you could build here. Now, we can see that debt net of current portion, and you can see that they've accumulated a decent amount of debt, right? That debt is sitting at $118 million. That is the biggest asterisk right there. They are pretty levered because they are constantly looking to acquire new businesses. They do have a sports bar that they're trying to get into this restaurant category. And I think they're franchising it, which is allowing them to expand. And it depends on where, because some cities they're electing to have corporate-owned restaurants. Other cities are electing to have franchise restaurants. So, you got to trust the process, obviously, if you're investing in RCI. All right, so that's pretty much what I'll cover with RCI. That it's basically a much better business than what people kind of assume. It's not the worst business. I know it's funny that this business even exists, and they're actually Let me show you another company, but this one I don't like it whatsoever, really. Okay, so this is one. Oh, and I'll show you some stocks that I'm going to be acquiring definitely, probably tomorrow. I'm going to be buying some Dow tomorrow and definitely some CE. I need to actually get on that because I just had a really busy day today. I didn't have time. So once I'm done with all this, I'll have a lot of time. So, Tyson, I love you. Step it up or end it. All right, I can check out MHO. But yeah, just letting you guys know that this is probably going to be added to the portfolio. So I'm not getting at the prices that, where it was really low. I mean, it's not really up too much. Fabio, I got a good one for you. Utz. Oh, yeah, I know it, Utz. Utz did a SPAC. Yeah, Utz did a SPAC. So Utz Brands, you guys know Utz Brands. But let me do MHO. And also let me talk about this one real quick. I just want to show you guys this one. Truck stop stocks. Yeah, so this is one that you guys might not know of. So this is a joke that we always talk about. So Travel Centers of America, one of you guys actually put this on my radar. Didn't know it existed, but it's a truck stop. So you guys like jokes about truck stops. Here's an actual truck stop you can invest in, and you guys know what noise to make. As soon as I show you this, make the noise. Right, here you go. You guys can come on, give me a roo. Waiting for the roos. Anytime now. Well, I know there's a delay, so the roos are going to come later. But this should be a battle cry for the roo because, you can see it's up 557% in the pandemic. And this is a truck stop stock, all right? You could have made money with truck stops. You could have, shoulda, coulda, woulda. Too late for you. All right, so I'm being asked to look at MHO. All right, so let's look at MHO. All right, so I don't know anything going into this. I don't know what this stock does. All right, so it looks like is this a builder? I think it's a builder. P ratio of 3.16. I can see why someone's asking for me to take a look at this because it looks really cheap. It just looks stupidly cheap. All the home builders right now look stupidly cheap. I can tell you right now, home builders are desperate, man. Home builders are really desperate. So let me go over here. So, okay, so this. Let me go to. Click here. Let's see how they've done. All right, the website's loading right now, and then I'll bring it back. Fabio's at ADS. I choose to feed my family or fill my tank because I'm lazy American who will never consider walking or riding a bicycle anywhere. What is that? Fabio ADS. I don't know what the ADS means. My brain's probably not working. I don't know. This comment, I don't know what this means, but you can't ride a bicycle anywhere, dude. I mean, I ride it to the gym occasionally, but it's still far. I mean, terms of kilometers, how do I say that? Like my gym is 5 miles away. So let me think about that. So about 3 miles is about a 5K. So it's just over 5K, and then you're riding there and back. The grocery store is decent amount too. All right, but anyways, could Bitcoin take over as number one in market cap? I mean, man, you're asking me about market cap. Oh, ads that played before. Oh, really? So I didn't know that ads. Like, I think that the live streams is kind of it played right now. I didn't say for it any ads to play. Okay, that's weird. Anyways, I'm trying to see this. Ooh, wait a minute. What is this? Oh wait, no, that's why, because of the area. All right, so yeah. I'll tell you right now that builders are being very pushy. They're offering tons of incentives all over the place, guys. I'm telling you, my wife and I, a year ago, we were like, oh yeah, we're looking. They're like, yeah. They shoo you away. Now they're kind of like, oh, are you interested? Do you want to come back? And that, so I'm liking the treatment because it's like, you feel like a customer again, not just like a one in the line. But yeah, my area is growing like crazy. Still too many people are trying to move. It just got nuts for a second. I throw my garbage at bicycle. I love that. I love it. Oh my God. All right. That's a good one. All right. So sticking to this company here, let's go to, no, I want to go to the main website. All right. So, all right, let's go to investor relations. Investor relations. We looked at Toll Brothers or stuff like that before. SEC filings. Oh, I'm gonna sneeze. Whew. Let me put this away. Never mind, it went away. And then when I go, I forget it. I think it's gone. It's gonna is all over. And you guys are gonna see me vulnerable and scared, and mostly vulnerable. Like if you guys attacked me in this moment, I wouldn't be able to defend myself. That's how I feel when I'm sneezing. I don't know about you guys. Do you guys like walk around when you sneeze, you feel just vulnerable? Like at any moment, someone's just gonna come behind you and just end you, or am I just unhealthy in my thoughts? COVID. Yeah, I know, bro. It's so bad. It's so bad. All right, so I want to show you some of the line items here that are pretty unique. I think they're interesting. So it's different from like a REIT or anything like that. So you have cash loans, all that same jazz. Mortgage loans held for sale. So this is basically because they don't want to own this. They don't want this. They really don't want that. So when you go to a builder, if you guys haven't purchased a house for the first time, you go to a builder. Right. If you're buying a new construction, you go to a builder and you say, okay, I want to buy. And they're like, okay, well, you can come with your own loan or you can go with their incentives for their loans. Always compare products. A lot of times they're really incentivized to produce a loan for you if they think it's going to generate a new sale. And I think just now they weren't really that incentivized because their money was pretty cheap enough, and they were just trying to sell the homes like hotcakes as for a high price as possible. So they want to, if they generate a loan, they don't want to hold that on because they're not a bank. That's not what they do. They are developers. They buy new land, they develop it, and then they sell it off. And the loans are just a temporary stepping stone. They'll produce the loan, sell it to someone who actually wants to hold it, and that could be a bank. We've talked about other banks. We showed you guys like PNC. PNC had a huge amount of mortgages on their balance sheet. Wells Fargo has the same things, et cetera, et cetera, et cetera. So taking a look at this, you have inventory. So what's inventory? Well, inventory, of course, is what they have to sell. That's the value of their inventory. So the present value of their inventory is about $2.8 billion. And so whether or not they're able to sell it for that price, different question, but that's what they have it valued at. They could write down that inventory. That's still a possibility that might happen. Now, going down some other line items, we have property, plant, and equipment. We have investments and joint venture arrangements. So sometimes developers will team up to develop land, and that will be recognized there. Operating lease, right of use. Okay, so all that jazz. And goodwill, some acquisitions they've been doing. It's pretty much the same. It's fine. Okay, so it shows me they didn't write down goodwill in that year that they've been. Well, what is this, a quarter? Or not even a quarter, a half a year. So whatever. All right, so as far as debt goes, nothing seems to kind of stick out. Debt's pretty much on par. The inventory that they have on hand seems pretty interesting if they could actually sell it for that amount. The thing is, the reason why it's so cheap, I think, is the market is telling you we're probably going into some sort of slowdown. Builders are feeling that. I feel that when I go to talk to them. So you go talk to them yourself and see what that's like. But yeah. I'll talk about that, Brooke, because I'm going to actually bring up Bruh's comment because I think it's about this investment. I haven't made the investment yet, but let me see here. Someone is saying not selling until 60. Who commented this? Oh, someone's invested in Unum. You're not selling till 60. Well, if this person is watching this live, if you came from that video, because I just saw your comment just now, I'm not selling the whole thing. It's we're seeing how it goes, but I'm designating it. It can take me a very long time. It took me a long time to sell out ConocoPhillips. It could take me a long time to sell out this one too. All right. Anyways, let's see here. I don't think really anything kind of sticks out. It's payable. Yeah, it's nothing that's like a big concern. So yeah. What I would be kind of concerned about is kind of the macro for this. This is a company that I actually would care about macro, right? Because this is contingent on what they're able to sell it for. The fair value, right? Inventory is marketed at the fair value estimation, what they're estimated to sell it at, right? That could come down, that could stay the same, et cetera. All right, so I'm going to comment real quick on CE. So CE, Bruh is saying for CE, you have to watch out for them continuing to increase their leverage using debt in an unattractive debt market. It's still not that unattractive. It's not as attractive as before, but historically speaking, the debt markets right now aren't that bad. They're actually still pretty good. We're just spoiled now, and we're really used to. Don't think 2020 and 2021 was normal. That was so far from normal that people right now think mortgage rates are stupid high. Right. So Tyson, I agree with that. A housing market crash right now would be fantastic. And I think it's not going to be like 2008. Like that was like a once in a lifetime thing, right? Or that was a very unique circumstance. Now it's like, I don't know how big it's going to be. I'm just going to do what I do, right? I'm going to buy a property. I'm going to get rid of a property, buy a property, and see how that goes. And this one will be for me to live in. And then I'm going to kind of be judging it based off of the, my liabilities, and then seeing, of course, trying to keep it maybe as low as possible. Like I'm contemplating even just going for, a cheaper house entirely, and then just like completely just saving a stupid amount for like the next 5 or 6 years. And then from there, you know, who knows, and build the portfolio out even more, invest even more, and really just see how that goes. All right, Fabio, my cheesy glasses, man. Your cheesy glasses. Oh, you want BurgerFi? All right, so BurgerFi I'll do on the live stream. I wouldn't do it in a video. And the reason why is because of its size. So, yeah. JP is like, thank you, Fabio. Rates are still dumb low. Yes, because they are. People are really used to rates. Now, I don't know why. They were only there for a little bit. And when rates were that low, it was insane. Like my stand-up jet ski was valued at crazy levels. Like even that, I was like, I was astonished, like what I could sell it for in Facebook Marketplace. I was just like, this thing is from like 2006. Right? It still runs like a charm. They don't even make them anymore. By the way, the 2-strokes. They make the 4-stroke engines, but the 2-strokes have their charm. The SXR 15. We're getting into a topic. Sorry, you guys are not here for jet skis. But anyways, Daniel says, "Do van life for no? You forego van life when you get married. Anyone who's married can probably attest to this." Yeah, you forego that. That's no longer an option, especially if there's like a constant threat that your spawn might show up. That's a funny way of saying you have kids. So if there's like that, because we're not planning on it, but like it could happen, and if it happens, everything changes, right? So priorities have to change, et cetera. So, I have to be responsible and prepare for that, because if I'm just like if I act like, I guess a lot of guys my age, maybe I'm not going to prepare for that. And it's going to be like, oh my God, what am I going to do? So I want to be prepared for that moment. And so just in case. So I do need, like, I have specific, necessities for the amount of rooms that I still would need to have, while also maintaining the assurance that, keeping everything under control. All right. So let's see what some other questions. Oh, started geeking about the ski. Yeah, Noam, man. Noam, you've ridden the ski. Well, yeah, we're not talking about the ski. No one came here for the jet ski talk. All right, so, oh my gosh, JP's talking about skis, man. You're gonna get me into it. Yeah, so wow, JP, if you ever come down here for whatever reason, bring your ski somehow. I don't know. Bring your ski. We got this. Like, you got a wave runner. All right, because I have a crew that I go out with. They actually know about YouTube too. We do not. The gators don't come close. The gators don't come close. Every time I do the video from like the lake, you guys are always like commenting like, I'm not going there, staying away from the gators. The gators don't come close, guys. You guys have these misconceptions about lakes. Especially Florida lakes, we're Florida men, right? Well, especially those lakes are very well kept. All right. Anyways, you can pet them, JP. No, I wouldn't say that. Anyways, kind of talking about tiny homes are mad alternative lifestyle. I love the tiny home lifestyle. I really do. I there's something nice about it. If it were up to me, guys, I would honestly be living in like the smallest unit possible, the cheapest unit possible for myself, living there, and then maybe own rental properties where I could generate, some cash and stuff, and then my investments. And that's how I would live. I would love that. I would actually love that. I don't care. I just need my little space, being able to do my thing, and that's it. All right, so let's see here. Gulf Coast here in Tampa, and killed by 2 Ben, way to scare the non-Florida people. I mean, yeah, way to scare the non-Florida people. Puts on Foot Locker, puts on FL, but I know what you meant, Florida. Thoughts on EOG or oil and gas stocks in general? Well, I've already exited all of them except for like BHP's exiting gas, but like I've exited all of them for the most part, because I do believe that I'm a bit more cautious on, you know, some of the aggregate demand numbers that we're going to probably be seeing. But longer term, there's a lot of concern about how much was going into investments for production. Now, I think that this was something discussed in the Discord between among you, and I agree with this. And I think that Buffett might make a play to acquire the full Occidental Petroleum portfolio, because he actually made a go, and I didn't know this until you guys actually notified me. So you see, like you can't know everything at all. But if you guys remember that Dominion Energy, Berkshire Hathaway made a bid for Dominion Energy's LNG business line, and it didn't go through. So something that actually might happen is that we know that Occidental Petroleum, ticker symbol OXI or OXY, let me actually show you guys that OXY stock. It is, I mean, it could be completely acquired by Berkshire Hathaway. They would get all the oil and as well as the LNG products. And it's still trading well below pre-pandemic levels. I mean, we saw highs in Occidental at, I think, around $100. So we're still pretty far away from that. We're far away from its lows. This is the one that I wish I obviously didn't sell early and I would have kept it for longer, but it is what it is. And it actually performed way better than ConocoPhillips over that same time period. But yeah, T-Rex over Gators. Yeah, absolutely. Travel Centers of America and its preferreds. Oh, you want to take a look at its preferreds? I mean, yeah, preferreds is sometimes something like that. But yeah, that's pretty much my thoughts on EOG or oil and gas. I'm out of it, but the longer term thesis that some people kind of show is, well, the lack of investment in this area stands to your benefit, to a lot of these companies' benefit. And the reason why Occidental Petroleum was such a good performer throughout that same time period, because I literally bought them and ConocoPhillips at the same time, was the leverage. So I perceive the leverage as risk, but the market, if things go well and you're very leveraged, you have the more to lose, but the more to gain if things turn out well. That's exactly what happened, because they took on a ton of leverage from that Anadarko Petroleum acquisition, and that's actually what all this suffering was. They actually outbid Chevron. So Chevron was trying to acquire Anadarko Petroleum for its oil reserves, and they were unsuccessful because Occidental Petroleum was like, hold my beer, I'll offer higher than what that guy's offering. And remember, Chevron's a big boy, so they just didn't accept it. Anyways, Mastercraft, Mastercraft boat. I mean, they make good boats. I think they're public traded. There's a couple ones that are publicly traded. Nautique is around here as well. So Nautique makes some good boats, very expensive boats. They're like kind of like having a Ferrari on the water. So Nautique's one. Kramer, in love with my company. Oil puts on work. You can't tell us where you work, Julius, but unfortunately, maybe some puts on oil. Maybe. I don't know what the premiums are like. If you guys check out the premiums, let me know. How much does a good ski run you? In terms of cost? Well, the thing is, so Bru's asking about jet skis. So, I mean, if you want an entry-level sit-down PWC, you got the Sparks. Sparks are good for what they are. Very light, very fun. You can swing them around like crazy. A high-end ski can cost you like about 20-something K. That can go really fast on the water. But if you want like more of a fun exercise, these what normies call them are stand-up jet skis. Technically, the jet ski brand comes from stand-up jet skis because that's what a jet ski actually is. So like an SXR 800, they don't make them anymore because they're two-stroke engines and those are now illegal. So you can get the newer variation, which is a 1500, the SXR 1500, and that one it's stupid fast. Oh my God, it's fast. But you can't. It's not as nimble because obviously there's a heavier engine. It's a heavier ski, but yeah. Okay, so Fabio, is this a time for sin stocks and thug life investing? Oh, I love the reference of PPC Ian. So, sorry, we're gonna talk about BurgerFi. Man just wants BurgerFi. All right, so we'll talk about BurgerFi. So BFI. I mean, it's a position within the portfolio, so people are gonna think I'm pumping it. It's because of the size. I'll tell you right now, just don't buy it. Stay away from this. Don't buy it. Don't even bother. All right, so we're looking at this because Fuhat's asking. This was a SPAC, and this is literally, I kid you not, it's one of the fun stocks, okay? You can have a fun stock. So it's one of my fun stocks, and I think it's one of the worst performers. Aside from the other fun stock, which is like Greenwich Life Sciences, I think. Greenwich Life Sciences just is like a huge speculation on their cancer research, but yeah. We're looking at this company, kind of a meme stock, absolutely, but not really. I don't think it ever achieved meme stock status. It's just dud stock status. Like it's just been a bad performer. But let's see on their website. So this is, anyone who lives in Florida knows about this. They also bought Anthony's Pizza. You guys may have visited Anthony's Pizza. I think they have a bit more locations. They merged, and I think the CEO of Anthony's Pizzas became the CEO of the full company, and the CEO of BurgerFi remained as the underling CEO of BurgerFi. So it was basically like Anthony's Pizza's way of going public through a reverse merger in some ways, because I think that Anthony's Pizzas was the bigger company. So a reverse merger, we can kind of think about it. It's not, I don't think it's technically a reverse merger, but what basically a lot of Chinese companies did this. We talked about this. A lot of other YouTubers also mentioned this as well. Remember when we talked about Voyager Digital. Well, Voyager Digital did a reverse merger to actually go public. It was a way to skirt around regulations. A lot of Chinese companies, a lot of these VIEs, these scam VIEs, like even worse, way like on a whole other level than like Alibaba and stuff like that. Like Chinese Paper was one of them. That was a big fraud back in the day. So they all did reverse mergers. I'm not saying Anthony's Pizza is a fraud or anything. It's just like one thing that the two companies probably talk to each other, and BurgerFi is like, we're already public. You might have thought about going public. We can just merge and become one public company. So when you buy BurgerFi stock, they're probably going to rename the company at some point, because it is misleading, because they own Anthony's Pizza and they own BurgerFi, and I think Anthony's is bigger. So don't be surprised if they do rename this company. All right, so what is this? They have a credit card now? What? Why? Okay, I mean, I go there on occasion, but the thing is, it's not really worth it to me, because with my card, I get 5.25% cash back on food with Bank of America. Check out my sponsor, Bank of America. No, in all honesty, my sponsors are the FTC, the FDIC, the Treasury, U.S. Treasury, and the IRS. All right, anyways. So Anthony's Pizza and Wings, I've been there a couple times. It's pretty freaking good. The PCAOB. Thank you for reminding me. Good afternoon. Did Fabio talk about China? I did talk about China a little bit when someone asked. I was basically just showing the old videos. But yeah, if you have a question, Austin, you can ask about it. I can get back into the topic. I didn't really go too much into it. I basically just showed everyone the old videos I have and just directed them to it. Chase Sapphire is the card of all credit. The card no, it is not. I will debate you on that till forever, LB Champ. I'll look at Sens as well. All right. Kind of finishing us off here with BurgerFi. I like the food. Some people will prefer Shake Shack. I think Shake Shack and BurgerFi, they're very comparable. You've seen the robots. Okay, so I'm going to look this up, Fuhat, because you're mentioning some robots here, and I need to see this. I mean, are you mentioning like their ghost kitchens? Is that what you're referring to? Oh, you're talking about this, man. Oh, yeah. I saw this. So let's show this to everyone. So this is a bullish sign. No, I'm just kidding. But in all seriousness, this is something that all restaurants, I think, are gonna. Oh gosh, I just want you to show me the thing. Show me a picture. I don't care. Basically, it delivers the food to you. So it helps. This is a solution that they're going to come to with. Oh, I didn't mean to do that. That they're going to come to with when it comes to the labor shortage, which BurgerFi, like all the other ones, has been suffering from. So yeah. We're all talking about credit cards now. Look, guys, I will debate you. I prefer no annual fee cards. Oh, the Costco card's pretty good. The Sam's Club MasterCard is bae. I don't know what benefits they give, but yeah. Tyson Industries, have a good night, man. Thank you for stopping by. All right, so Costco City Card. Wait, Costco has a City Card. What? How do you feel about Rick pre-ordering the Tesla bot? Oh my gosh, that would be so funny if they did that. Hello, Master Doctor. How you doing? Yeah, Costco card's pretty good. I have to check out the Sam's Club. I have a membership at Costco. Everyone has a membership at Costco. Everyone and their mother. No annual fee. They give you $800. LOL. Wait, who has no annual fee, LB? Wait, what are we talking about here? Wait, the Chase Sapphire Reserve and Preferred have annual fees. How are you not getting an annual fee? But yeah, so let's continue with BurgerFi. Where did I shove BurgerFi? Somewhere. Oh yeah, here we are. But yeah, there's some concerns with BurgerFi. I'll kind of show you guys that. Where are they at? Investor. Oh, it's not on here. All right, so I'll just find this. All right, let's pull this here. All right, there's too many tabs. Oh, too many tabs. Get out of here. Too many tabs. Way too many tabs. Nissan Leaf. Get out of here. All right, back to this. Chase charges you $90, but you get 80K points. Okay, but that's a sign-on bonus. I'm talking about longevity. So yeah, I've done that in the past too, with the Chase Sapphire card. I think it's $95, but yeah, you get in value about 800K, but that's after the bonus. We're talking about bonus. So I'm looking at longevity for a card, and so you don't want to get into that mental trap where you're starting to spend money to like make money. It's because it's silly, but unless you are already having to spend, like you have to spend that much money. Because I'm always looking to say, okay, how can I save money so that I can save more money? And then a no annual fee card doesn't put on any sort of pressure. And then, it's hard to beat 5.25% cash back, right? It's cash. And you see, like basically Bank of America, what are you doing? You should be like sponsoring this. I'm basically just touting out how great you are. Anyways, you can actually elect so that it automatically invests your cash back into your brokerage account. Very similar to how the Charles Schwab card does that. But imagine doing that. So every time I go out to eat, I have a couple of the red cards and I have them designated to different things. So when I go to swipe for food, 5.25% of the food will go into, my investment accounts, and it'll automatically accrue there. I don't really care too much about, saving up using the cash back for flights. I don't really care. I'll just pay for the flights. I don't care. I like to shop around. JP, if he is a troll, he's always welcome. I troll harder. No, I'm just kidding. That's a reference. Maybe that's more true. Yeah. So then, okay, if you're comparing it on the base levels, I would say that Chase has some really good cards. On some payment protection, I think Amex is like really solid, really freaking solid. All right, but yeah. Sorry. Going back to BurgerFi Phuket. I'm sorry. I'm so sorry. We're talking about credit cards here. I saw that Graham Stephan went back to credit cards. So. He did a credit card video. That's how I actually knew about Graham before anything. But he went off into like millennial money and stuff. All right, so award-winning, whatever. Burgers are pretty good. I'll say the burgers are pretty good. So this is the pizza. Anthony's Pizza is really good. It's pretty freaking good, guys. Okay, so we have a question about China. I'll keep this up so I remember to answer it. So I'm going to go through this real quick. So adjusted highlights, we have adjusted EBITDA. Oh, look at that. 883% year-over-year growth. Probably a lot of that is just the merger. Total revenue, 285% year-over-year. Again, probably because of the merger. Total revenue, yeah. You can see here, this is exactly why. So I'm right. I predicted this. I'm just kidding. But Anthony's is the reason why it grew so much. And I told you, Anthony's was bigger. I was right. They're going to 100% change the name. The CEO of Anthony's is the current CEO of the combined company. So, yeah. System-wide unit count. Again, they added Anthony's. So it's funny. Well, Anthony's is a different type of restaurant. Higher tickets, typically. So with less locations, they produce more revenue. It's more condensed. And then EBITDA, right now, the majority of that EBITDA growth came from Anthony's, okay? Because BurgerFi is still kind of figuring it out. Together, they are strong. So apes together strong is actually true for this, right? System-wide sales, okay, growing, blah, blah, blah. All right, so store, roll forward. So what they have here is this breakdown that you can see. So they have 183 total for BurgerFi and Anthony's. And so this is actually where they're kind of progressing I think that they're trying to do a mixture. So some cities that they know and understand, they're going to do corporate owned. Other cities they're going to do the 97 they're going to franchise out. I think the ones I'm surrounded by are all corporate owned. And they're originally from Miami. So funny enough. Oh, you're a chef, Fuhat. Well, Fuhat, you gotta show some recipes, man. You gotta print those receipts. You gotta show me the recipes. All right, Kevin, did you read about 11-year-old who got scammed out of $100 at his lemonades? No way. What the heck happened there? All right, so let's go. Question about if I see a Taiwanese person, I would say that. No, I wouldn't say that. It's almost like I'm making fun of them. That would be rude, but I don't think the West is going to allow that. They produce so much of our chips. Even like I don't like when people say like China produces our chips. It's like it's Taiwan, but okay. All right. But anyways, going through some of these highlights, what I'm kind of going to see here is I want this company to show me that they can control the expenses. They can control the expenses, bring it under control, and from there grow. Okay, because otherwise this ain't gonna be pretty. Down below we go. Lots of debt ahead, lots of dilution ahead, but there is a possibility if they manage it well, that it could turn out good. But a lot of research has to be done. This is not a core holding. It's not. I wouldn't even consider it speculative, but it's fun. I mean, I'll still buy it because I'm still buying it. I literally do this. Like if I have spare change, because it's like $3, I just like throw it in here. So, LB Champ, who, are you asking if other people own this? I own this as like a fun stock, but yeah. You seen Toast, like Toasted? Yeah, I like Toasted. I find it hilarious that some grown man is evil enough to scam an 11-year-old. My gosh. Oh, yeah. Charlie Munger used to pump this stock, impossible. All right, so Austin asks, let me actually go to something else. I'll show this stock. Austin asks, Capital Mindset, Fabio, regarding China, CN, how likely or how, no, this symbol's in the way. How likely the sentiment will get better, in your opinion? There were some news that there's no QE anymore that everyone expected. Well, the stimulus in China, remember, it's not like our system. They're not the world reserve currency. And even the modern monetary theorists will even say that the debt into infinity applies only to the United States for the most part, right? Some exceptions, but you have to have like a reserve currency status. You can't do that. You can't do what China is doing. So China has its own little bit of issues going on, but. So sentiment changing in China, I mean, all it would take for Chinese stocks to rally in any given day is just the Chinese government to say, we're going to be more friendly to businesses. And that happened. I made videos on that, and then that would subsequently happen. Because a lot of the sentiment right now, no one is pricing in the VIE risk. No, that's not being priced in. If that was being priced in, I guarantee you, it would be priced close to its actual intrinsic value. Would love more macro videos. Need Austin a part of them. Those videos were so gold. I did some macro videos after the fact, but I agree because it's good to have someone to kind of guide the conversation, to ask questions if they're also trying to ask. Bubble run when strongman sells. I mean, no, I think because the thing is with Chris is it's less than 5% of his total net worth, which you'll be very surprised the power that gives the individual to think calmly about an investment. And so they can afford to be a lot more patient if the vast majority of their wealth is in other stocks. So you might see, for example, I have some stocks that are like the fun stocks. Look at the allocation. Let's kind of go over some of them. Where'd I put it? So let's go with like the ones that are destroyed, right? Let's ignore the one that's doing really good, like Coupang. Let's go to the fun stocks. So you go to GLSI, Greenwich Life Sciences. That one's down about 69.82%, right? I think the average person would be pretty freaked out if that was the typical, position in their portfolio. They'd be like, oh my gosh, I'm down 69%. Funny percent to be down. But if you look at the allocation, it's at 0.03. So naturally, I wouldn't bat an eye. I wouldn't really even care. It doesn't matter. So same thing kind of goes with Strongman and his BABA position. So if it's less than 5% of his portfolio, which is, it's even less than that, because that I think is his total allocation. What does it matter? It doesn't matter as much as you think. Fuhad, yeah, I own Coupang. I did a video on buying Coupang, and I talked about Coupang before. I did a video on Coupang before that, saying how it's de-risked. It just aged well. But yeah, I own Coupang. It's a speculative holding. It's not like a core holding. Now, I wish it was a core holding based on its current performance. But yeah, it is one. Good night, Noam. Rest easy. Tomorrow we gotta work on it, but it's good. We did really good. You got a passing score, man. So that's really good. All right. So the value can't be computed. What is the empty buildings good cause? Then people aren't ruining the housing. Well, who's the scammer? Who's the scammer? Taught him a cheap lesson early on. The value can't be computed. Love The Sims. All right, so thoughts on end phase. Oh, that's the one that I kind of asked what I asked me Kevin in the live stream that he came. I was like, what's the stock you'd like? And I was asking him questions like that to see like actually what he would say, because I asked him the DOI thing, and he quite literally said F off. One of the things I asked him was to say, okay, well, what's one thing that you would like? And he said end phase. I think end phase is crazy overvalued, but their TAM is growing or whatever, and yeah, therefore they're buy. All right, the company's down 3.41%. Okay, but whatever. You can see like their performance in the past 5 years is stupid. Oh my gosh, stupid. Like this is nuts. This is nuts. Let's see here. Dude, I don't know why it's getting shut on. Oh, Coupang? Like people are pooping on Coupang, like they're talking bad about it. Yeah, I mean, Coupang it made sense to be skeptical on it back when it was really high though. I think because I did updates on Coupang. I talked about Coupang a couple times. But not dedicated videos, I think. I'd have to look back. Finally got my FAR score back. Got a 90. Oh my gosh. I mean, if you get a 90 on all of them, you get that award. I hope I get a 90, but I've only studied for it for 3 weeks. The exam's on Friday. But the score, I just did the Becker practice exams that are supposedly harder. And on the one we just did, I got a 72. So that's what I hear is pretty good. If that was the actual score for the exam, I would not pass, but they curve it, so I would pass maybe. But so from my understanding, it's pretty good. It's pretty good. Noam also got basically a passing score based off of the Becker scores, but he's really hard on himself. But he's gone now. I was going to tell him like my last message should not be hard on yourself. Yeah, because he did a good score too. It's been a tough 3 weeks. I know JP, you're telling us all about how it's different. Capitalize. Yeah, I got mid 70s on all the practice exams the week prior to taking it. Okay, so that's awesome. Fuha, what the WTF is FAR? FAR is I think it's the hardest, depending on who you ask, CPA exams. You got to pass 4 of them in order to get licensed. So that's good to know, Fake Alias, because I would like to get that score on 90 on all of them or above if possible, because that's a huge flex at the end of the day. If you scored 90 on all of them, because you get that award. I forget the name of the award, but it'd be cool to have. Okay, so is there a better spot for the camera so we can see the company name? Oh yeah. Sorry, I usually put the camera like here-ish. Apologies for that. I said I was going to put it there today, so you're just joining, and let me put the comment down here. Yeah. Thank you for saying that. Sometimes I'm looking at the comments and not at the actual screen that you guys are seeing. So yeah, JP, that's financial reporting. So that's the financial reporting exam. For you guys, it's a little bit different, I guess. Lafufu loves that ratio. What ratio are you talking about? JP, I need to do a meme on Lafufu picture. Oh yeah. All right, so with some other stocks that you guys are asking, you guys can pretty much ask for any other one, and I'll look into it a little bit. Thank you for the take on China. There would be tongue into retail not caring about macro makes so much sense. The Fed and a bunch of economists that study it their whole life can't figure it out. Yeah, so Austin, yeah, it's not. You probably were mentioning from the Discord conversation. So someone in the Discord conversation, I think they're probably studying right now economics. So it's not that practical for retail to focus too much on. Oh, UTS. Okay, we'll do UTS. Yeah, that's right. So it's not that practical for retail to pay attention to the macro economic whatever, right? It's just not practical. So you're more often than not going to make rash decisions, emotional decisions, probably at the wrong time, because you're following the crowd mentality, and so you're probably going to be selling at the wrong time, buying at the wrong time, just worsening your position. And that is why the optimal strategy for everyone typically is to just dollar cost average into low cost index funds, and that's about it. And then you're fine. That's all you got to think about. Okay, so shop our brand. So this is Utz Brands, and the reason why this is, I guess, kind of popular on YouTube is there's a larger YouTuber by the name of PPC Ian. He talked about this company. You can just tell because he's very private as well, and all respect to him for being private with his personal life and stuff like that. He's very wholesome. Like, he has this thing about crypto that he was involved in, but to be honest, guys, I think he has the money to do it. Based on some subtleties that you can kind of tell from PPC Ian, he definitely has the income, the net worth to dabble in things and just not even care, right? So on a whole different level. If I had one criticism, it would be that maybe to address more of the risks. But he does, but maybe a little bit more, right? But it's not really. He's okay for my guess. Go through the Meet Kevin ETF prospectus. Oh my gosh, that is a thing. Oh my gosh. Okay. Wow. Can someone link that to me in Discord? Just send it. Just send it to me. The ETF prospectus. I will 100% look at that. That is S tier content. I did not know this was a thing. I saw someone mentioning it earlier on, but I didn't know it was already out. All right, anyways, let's just finishing up with this, but send it to me on Discord. I'll pull up Discord. I have it here, and you can send it to me. Just post it in general or something like that, just the link, and then we'll get going on it. Oh my gosh, that's incredible. It's an ETF. He did an ETF. Wow. Oh my gosh. Okay, so anyways, you got Utz Brands, you have a whole variety, you have some free frozen food products like, I think these Fridays ones, that's a Friday French fries I probably see at the supermarket. Oh yeah, JP, he is going to be so rich. Oh my gosh. Let me see how, he has 3 ETFs coming out. Okay, what can I just Google keywords so I find it super quickly? Just type that out, and then I'll type it out. Yeah, just type it out, and then I'll find it. You didn't see us make fun of me, Kevin's. No, Master Doctor. Today I was doing simulated exams. I was not. Let me actually see if you guys were talking about it. I can probably try to find it. Okay, so let me just do this. All right, so I got someone's comment here, and they're talking about it. Okay, so is this it? Oh no. Scrolling through. Yeah, I did not see this. This completely escaped me. That's crazy. All right, so there's this. Let me try to track it. There's this. Okay, so you're talking about it through this. Okay, here we go. Meet Kevin All-In ETF. Meet Kevin Select ETF. Meet Kevin Moderate ETF. Prospectus. Is there links? There's no tickers yet. I mean, just tell me what to like search real quick, so I don't have to spend time too much searching. I'm exhausted. Is this the same guy? Oh my gosh, someone posted this
stuff, and I go, I know what to do. Stocks, I don't know. The point is, to me, real estate's freaking easy because I look at this stuff and I go, I know what to do.
I'll just Google
stocks.
This.
I don't know.
It should populate.
The point is, to me, real estate's freaking easy because I look at this stuff and I go, I know what to do. Stocks, I don't know. The point is, to me, real estate's freaking easy because I look at this stuff and I go, I know what to do. Stocks, I don't know.
I'm sorry, I just left you guys on, just like listening to that over and over again. Okay, so that's easy. I can just do that. All right, so it's already filed and everything. SEC. And I'll just search it in there. Wow. Oh my God. All right, so I can never pronounce or spell his last name. Kevin, and then Paffrath. Oh, there we go. Okay, I'm spelling something wrong. I'm spelled it how you spelled it. Kevin, Paff. Okay, that's not how you spell it. Let me actually. Did I spell his name wrong? Kevin, Paff. Yeah. Okay. No, it's Paff. Yeah. No. What the heck? Copy. All right. Let's try one more time. Kevin Paffrath. Forms. Let's just search Kevin Paffrath in forms. No results. I typed it in the SEC. It's not coming up for me. That's weird. Paffrath. Yeah, that's how I'm spelling it. Paffrath. Kevin. Here, I'm gonna do this. Okay, let me jump to present. That is so weird. Why am I not able to? I'm on. I looked through everything, through forms, and I looked Kevin Paffrath. It doesn't come up for me. And then I go Kevin Paffrath on Google, SEC filings. Try Meet Kevin for the lulz. All right, I'll try Meet Kevin. Oh, you know what we can probably do? Meet Kevin All-In ETF. Maybe that's what he puts. But it should be coming up. Let me go in everything. Oh, there it is. Okay, so, well, there's something that comes out, right? At least with this. Oh, no, but it's Kevin. Kevin's what? That's annoying because I put Kevin and then Paffrath. No, then everything goes away. For some reason, it doesn't recognize Kevin anymore. But if I just put Kevin in something else, aside from Paffrath, it comes up with tons of stuff. Annoying. All right. All right. You tweeted me on Twitter, or you responded to me on Twitter. Oh, you sweet angel. All right, go back here. Oh, thank you. Thank you, sir. Oh, let's go. All right, so, oh my gosh. All right, so let's see. Let's go through it. So principal investment strategies. All right, so let's see if it cooperates. And I just want to make sure you guys are good. All right, so okay, so principal investment strategy. The fund is actively managed, exchange-traded fund, actively managed exchange-traded fund. So it's basically ARK Invest that seeks to achieve its investment objectives by investing primarily in U.S.-listed equity securities and innovative companies defined below. All right, we'll see that. The fund categorizes an innovative company as a company determined by the fund's sub-advisor, Palto Philosophy LLC, sub-advisor to be involved with the development of the new products or services, technological advancements, consumer engagements, blah, 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 blah. So who is running Palto's Philosophy LLC? Or Plato's, oh, I'm sorry, Palto's. Brain's like dead. Plato's Philosophy LLC. All right, maybe it's him. All right. Then go into the innovative company selection. The sub-advisor begins its analysis by screening an initial universe of U.S. listed companies with a minimum market capitalization of 100 million, utilizing a proprietary screening methodology. Okay, cool. Sub-advisor then analyzes the remaining of the companies to identify those that are innovative companies. Sub-advisor, using its own internal research and analysis, analyzes companies' self-reported data, as well as third-party data, such as news articles and social media posts to companies that are capitalizing on development of new products and services, consumer engagement, technological advancements, buzzword all the way. Buzzwords all the way. Maybe I should start an ETF. Oh my gosh. All right. If I start an ETF, Daniel, it would be the RU ETF. Absolutely. No, it's too much work. Anyways, additional, and I'm not allowed to, by the way. That's another thing. I 100% would not be allowed to do that. That would have so many implications. I would have to definitely that would be way down the road. I am not allowed to do that. All right, anyways. Please, I want, bro, please, I want in. What ETFs do you own? Oh, I own RU. I would make the expense ratio just low, just for the lulz. Just like point. It'd be lower than the Vanguard ETF. And it just mimics the S&P 500. It's just RU ETF. Just always underpricing Vanguard, so it's just making $1 a year, just losing money. All right. Yeah, you do need a decent amount of money. All right, so ETF risks or new sub-advisor. Sub-advisor is a newly formed entity and has no experience with managing an exchange-traded fund. Okay, so it's brand new company, brand new advisor, no experience, probably him. Commodity. Okay, no, that's just going over risks and stuff. Okay, yeah. All right, so here we go. So sub-advisor to the fund. Okay, portfolio managers. We have Kevin Prathrath for the sub-advisor, has been portfolio manager of the fund since inception in 2022. All right, that answers our question. Michael Venuto, Chief Investment Officer for advisor. All right, let's check him out. Has been portfolio manager for the fund. Charles A. CFA, portfolio manager for the advisor, has a portfolio fund since inception. All right, so these are people, I guess, to look up. It is not this guy. Can you imagine if it's this guy? That's him, guys. That's who's doing it. No, I'm kidding. Can you imagine? That'd be hilarious. I think this is him. Okay, so he's been in here for quite some time. I don't know if it is him, but yeah, could be him. All right, let's see this. All right, and then this guy, Charles A. Ragos. He has a CFA, guys. He has credentials, whatever it was called. All right, so this guy, is this him? Oh, no, they're the head of Torso Asset Management, the same place. These guys are at the same place. So that tells me, yeah, these guys are at the same place. Coincidence? I think not. All right, so let's see the investment objective. No way. The investment fund seeks long-term capital appreciation. I had no idea. I thought you're supposed to lose money. Why is he so white? Dang, Austin, what's up with you, buddy? Capital Minds to check Discord. I sent you something. All right, I'll check Discord. All right, general discussions. Here's the ETF team. All right, so this is the ETF team. Eric Felkus. All right, there he is. That's that guy. Where's the other guy? Where's the other guy? They are not diverse enough, ladies and gentlemen. This is the problem. All right, business technology analyst. All right, so what do they do? Title, team, contact us. Blog, service, welcome about partners. What are you guys? What is this? Title ETF service. We help navigate rising tides of ETF industry. Oh, okay. So these are like consultants that help you set up the ETF. So he probably contacted them, and he has like one of them on there. Okay. So let's see if we have Kevin's company on here. We don't have Kevin's company here yet, because it's not like out yet. SoFi. They have SoFi ETFs. All right. Cool. There's Carlson. Wait, what? Saw Carlson. How'd you see Carlson? Where'd you see Carlson? He's in here? You're joking with me, right? There's no way. Yeah, you guys were joking with me. All right, so the chief compliance officer was the head partner at what? What? Julius, is this true? The middle guy in the top. Oh, Carlson. Daniel Carlson. Yeah, where's the chief compliance officer? Chief strategy officer. Chief. Vice president of compliance. All right, this is vice president of compliance. That's crazy. Daniel Carlson. Title Investment, Torso Investments, LLC, to serve as CFO, COO, previously served as Chief Marketing Officer, Avatar Associates in New York City, led business development efforts, Avatar grew in asset management, of Chicago. Bubbleson's dad? Wait, is that actually Bubbleson's dad? You guys messing with me? A lot of these folks look hungover just from after the dump. Yeah, is this his dad? That's crazy if this is his dad. There's no way. I mean, if that is, that's, anyways. All right, so basically, let's go. Oh, we're LinkedIn. Let's remove that. All right, so portfolio turnover. I think we're pretty much finished with what we really wanted to see. They're not really going to tell us what they're going to invest in. We can see what they invest in later. That would be hilarious. Oh, come on, Julius. You had me going. You were like, oh, I was like, so like, what? All right, develop the new products and services. Because that guy should not have an employment. I mean, that guy really messed up, whoever that was. New advisors. Okay, so, I mean, that's good for him if it works out for him. If people want to invest in this, this is different. I wouldn't call this necessarily like grift. Like, I wouldn't necessarily call ARK Invest a grift. I wouldn't. It's just like, that's a strategy. Do you agree with the strategy? Right? They tell you what they invest in, not stocks, but criteria. Yeah, like that's all we're gonna tell. But really, it's pretty vague. A lot of it's like, oh, it's a proprietary screening process. All right, I don't know. So companies with market caps over 100 million. Well, they almost like they have to do that because you run into liquidity problems. That wouldn't be responsible. But yeah, we can find exactly where they say that. I'll just search it. Whoop. Let's go in here. There we go. So this is basically some of the stuff that they're looking for. But yeah, this is back to the top where we were. So it has to be over 100 million, obviously liquidity problem. So, LB Champ. So the lore of this is more lore. Yeah, this is Joseph Carl. I didn't come up with the name. I literally did not come up with the name. They did. The people around you, they all came up with that name. I'm not creative enough to come up with that name. Targeted ETF. Wait, whoa. What is going on here? During periods when the sub-advisor believes there is significant risk to the market as a whole or particular sectors of the market, the fund's portfolio may hold up to 30% of its net assets and securities of targeted ETFs to provide macro. So they're going to buy a macroeconomic hedge against the anticipated market risk. In those cases, the fund will hold ETFs that the sub-advisor believes will most likely benefit from the anticipated market risk. For example, the fund may hold ETFs that focus on particular industries, commodities, and or provide inverse exposure to broad market indices. Ooh, that's going to be dangerous. Yeah, that's already going to be dangerous considering Kevin's emotions. Michael Burry came up with Bubbleson. That's funny. All right, so yeah, I personally wouldn't invest in it, but if it works for him, it works for him. Good for him. It's much better than like courses, but the courses is what got him to there in the first place. Yeah. So kind of summarizing today, because then I'm gonna go to bed because it's already 12. So tomorrow I'm gonna be buying. No, Bubbleson does not equal me, Kevin. Bubbleson equals Joseph Carlson. That's what the audience has come up with a name for Joseph Carlson. Me, Kevin is me, Kevin. But yeah, this is not going to be for me. Tomorrow, I'm going to be buying probably CE and Dow Chemical. Those are the ones I'm going to be just adding to the portfolio, just making sure I get some exposure to them. I'm going to be buying them in a tax advantage account, so that's great. And yeah, I'll see how I can make videos tomorrow because now things are kind of calming down. I'm just on the review process till the exam, and I'm finally like in that more relaxation mode. So it's great. So you guys get to see me here now, and we'll see about that. Maybe more videos. So with that being said, guys, thank you guys so much for watching, coming on the live stream tonight. We talked about a decent amount of stocks, but yeah, finishing. Oh, just kind of some final thoughts about UTS. UTS could be a good stock, I guess. Where did I throw UTS? I threw UTS somewhere around here. Yeah, I threw it somewhere. But I'd really like to look. Oh, here it is. I really like to look at this company a little bit more. I mean, they are kind of a very small snack foods company, up and coming. Dead Money, you're asking a good question. Would I add to LYB? There's nothing wrong with LYB. I would be adding to LYB. What I'm doing with LYB is I'm kind of just nibbling. I want to build out Dow Chemical, get a different exposure geographically, as well as kind of build out CE. CE is a one that I want to own, or I'm a bit more excited to own, to say the least. But yeah, okay, thank you, Austin, as well. It was fun as always talking to all of you guys. And yep, I'll see you guys on the next one. Bye. Well, I'm gonna play the outro.
Live.
Okay.
We'll do it live. F it. Do it live. I'll write it and we'll do it live. F***ing thing sucks.
Yeah.